Streaming juggernaut Netflix will report its third quarter results this Thursday, and expectations heading into the print, they are high. Shares have been on a tear so far this year, up nearly 50% and outperforming 5 of the members of the Mag 7 during the same period. With more, we're joined by George Seay. He is Annandale Capital founder and chairman. George, it's great to have you, and you are a shareholder in Netflix right now, buying or acquiring your position back in 2022. So here we are, not too far from those all-time highs. What do you think the setup looks like heading into this earnings print later this week?
Hey, Shauna, good morning. I really think that Netflix is a great metaphor for the entire stock market, especially the Nasdaq right now, because they've really got to exceed expectations to keep the momentum going. And they've also got to count on the overall market staying constructive and moving up and to the right. I think they're a little bit of a, not a victim, but a carry along of that particular need if they're going to continue to forge higher. Because as you rightly said, the stock's up around 50% this year. But if you look back to 2022, it's almost quadrupled from the bottom since then. So that's an unbelievable move in a very short amount of time. So this is one of the must-own kind of companies. But if you don't own it yet, you probably have time to get in once it corrects at some point. We don't know when that's going to happen, but it's almost like the market is priced right now where everything's got to go right for everything to keep going up, including Netflix.
And George, when you talk about the fact that we could see some sort of pullback or correction possibly within the stock, is that earnings that you think could trigger that? Or I guess, what do you think investors should be preparing for as they try to gauge whether or not now is the right time to buy?
You know, they say sometimes that all the stars have got to align just right for things to work out. And I think that's where Netflix is right now. I think there's any number of catalysts that could slow it down at this point. They could not outperform on earnings to an extent that owners sell it off in a peak fit and all that, or the stock market itself could start to underperform on the downside, or the economy could slow dramatically, and that could panic people. So I think everything's got to continue to go right for it to continue to meaningfully move up. And by that, I mean 10, 20% or more like it has already this year.
George, how are you evaluating the rumors or potential here that we could hear about price hikes in the U.S., whether or not that's going to be a catalyst here to the upside, or if that could, in fact, I guess, evoke a bit of churn and maybe potentially weigh on shares maybe in the near term? How are you evaluating that?
Well, what a great company. It's a real pleasure to get to talk about them because they really are the 800-pound gorilla. If you look at their competition, whether it's Apple Plus or Disney Plus or Paramount Plus or Max, their competition is really inept at this point. So I think their pricing power is enormous. And I think that their advertising push that they've been doing for about a year and a half or a little more than that now has been extremely effective. So the execution is outstanding. I think if you talk about internal metrics and the way they operate, you have to be bullish long-term on Netflix, but I see some short-term headwinds in terms of valuation and everything having to go right on the market and them having to outperform dramatically. They really need to beat expectations by a lot to keep going up.